let's go ahead and kick off the stream with some Bitcoin TA. A lot of people are very concerned about Bitcoin, and I want to assuage those fears. As you guys know, it is one of our big missions here to bring you the bullish news, the bearish news, the bullish technicals, the bearish technicals, the bullish on-chain, the bearish on-chain, so that you can get all the information, so that you can come to a well-informed conclusion on what you think the market's going to do next. So let's do that here on Bitcoin. Is Bitcoin about to go through some massive flash crash and dump down to $20,000? Or is this the healthy correction that we have been calling for the last week and a half? Let's look on. Bitcoin right now, or as of yesterday, was in a rising wedge right here. For anyone who has not gone through the Cryptocurrency Technical Analysis Academy, a wedge, which we talk about in this video right here on wedges and pennants, is what you see whenever there is an uptrending level of resistance and a converging uptrending level of support. Now, we're not talking about a pattern like this. This is called a ascending megaphone is what a lot of people would call this. Those aren't very common, but what we're looking at right now, because these two trend lines, this red resistance and this blue support, they're converging. They're both moving to the upside. We're looking at what is known as a bearish wedge. You might think, Jeb, why is it a bearish wedge if it's pointing to the upside? Shouldn't it be called a bullish wedge? No, it is an ascending wedge because it's moving up, but it's actually a bearish pattern. Analysts throughout history have gone and done back analysis on a plethora of markets, going all the way back to the Dow Jones Industrial and Rail averages that were commonly analyzed 100 years ago. Technical analysis is a very old sport and an art, and whenever you go back and do analysis on certain patterns, you find certain trends. One of the trends that analysts have found over the decades is that ascending wedges like this, 70% of the time, seem to break to the downside. We had made the prediction a couple of days ago that Bitcoin was going to break bearish out of this wedge based on that factor and based on a plethora of other ones. We can see that that is what occurred. We broke bearish out of it starting yesterday, around 1600 hours. That's 4 o'clock in the afternoon for anyone in Eastern Standard Time Zone. And over the last 20 hours, we have pulled back 5% on Bitcoin. We're actually seeing something very similar happen on Ethereum. We saw that there was a rising wedge on Ethereum. We predicted that it was going to break to the downside. And over the course of 16 to 20 hours, we saw a 6% correction. And this has shown up in total market capitalization also, because we actually rallied all the way up to 2 trillion. I almost said 2 billion. I'm missing 3 zeros there. We almost rallied all the way up to $2 trillion recently on total cryptocurrency market capitalization, but as a result of this correction, we have now pulled back a little bit. We're currently sitting at 1.87. If we zoom in here, you guys will see market capitalization briefly got up above 1.9. We got close to 2 trillion. We didn't actually breach it, but we got very close. We've had a slight pullback, and that is as a result of this correction. The question now, though, is what happens next? Because I told you guys that there is a slight chance that the fundamentals take over and Bitcoin takes off and starts moonshotting. There is an opportunity for Bitcoin to do that, but I also said that the most likely thing that's going to occur here is that we're going to have a correction. Now, I gave price targets when I said that. I said that I expect Bitcoin to pull back probably between $42,000 and $44,000. We're sitting at $44,600 right now. So let's go ahead and talk about where Bitcoin might head next so that you guys can be informed on your trades and your investments, and also just for the sake of entertainment. Bitcoin has quite a bit of support underneath it right now. In fact, we talked about yesterday how the 200 daily simple moving average is a very, very important moving average that Bitcoin had briefly broken above. Unfortunately, this market has pulled back below the 200 daily simple moving average. For anyone who wasn't here in yesterday's stream, I'll go ahead and show you why this is such an impactful and important moving average. If we zoom out here and look at the long-term history of Bitcoin, Bitcoin almost always maintains above this trend line when we're in a bull market, and we're normally below it when we're in a bear market. Bitcoin is attempting at the moment to get back up above this moving average, but as you can see, as of this morning, we've now fallen back below it, meaning it has effectively operated as resistance. We got above it for a little while, but it is basically resistance, so we have now corrected. But as far as support levels, where might Bitcoin be going next? So $41,700 is a level of resistance that we saw set back on the 8th of January. We also saw it set here on the 14th of June, and we also saw roughly this territory, right around $42,400, set back on the 31st of July. We can also see the 20 daily exponential moving average is moving up to meet that. So I am expecting that Bitcoin is going to come down and meet one of these levels, probably around $42,000 to $43,000, and it'll more than likely bounce off of the 20 daily EMA as we did back over here on the 4th of August. So again, let's pause right quick. Let's give about 2 minutes and kind of tie everything I just set up into a nice nice, neat bow. I know I talk fast. I know we're talking about complicated things. I want to make sure anyone who's newer to technical analysis understands what we're saying. Number one, the thing you got to keep in mind, the Bitcoin fundamentals are incredibly strong right now. Remarkably strong. Bitcoin has a good opportunity to go to well over $100,000 in the next 12 months. In fact, there are arguments that we're going to talk about later on in this stream that it could go to $200,000 in the next 4 months. So don't get it twisted. Bitcoin is very bullish. That's the first thing. The second thing is that Bitcoin had a massive correction over the last 3 months, and we're now seemingly coming out of that. We're setting higher highs. Bitcoin is doing very well for itself. The market is very bullish, and it is very healthy right now. But the third thing to keep in mind is that for a rally to continue to be healthy, it has to have little corrections, little pit stops for gas. If you're traveling across the country, you got to stop for gas and snacks every once in a while. We use the analogy of a controlled burn oftentimes. The Forest Service in America learned, hey, if you try and stop all fires in a forest, what happens is a lot of dead debris builds up on the forest floor and it turns into a tinderbox, and eventually when lightning strikes, the whole thing goes up and you get a massive fire all at once instead of a bunch of little fires that are controlled. We want to have a bunch of little fires that are controlled because you can't avoid fire in a forest. It's going to happen. But what you can do is you can make sure it's manageable by having a bunch of them spread out instead of one massive one all at once. What we saw 3 months ago was we saw one massive fire all at once and Bitcoin dropped 50%. What we'd much rather see is a bunch of smaller little fires that are 10% but are more frequent. That's what we're seeing right now is we're seeing one of those little controlled burns keeping us safe. So I think that Bitcoin is going to pull back to around $42,000 to $43,000 based on the technicals that we've been looking at this entire week, based on our ascending wedge, based on the fact that Bitcoin needs to stay healthy by correcting, and also based on the fact that a lot of the people that are in profit right now are selling their Bitcoin in the short term looking for a lower entry price. I think we're heading back to $42,000 to $43,000. From there, I think we're going to bounce, rally above $46,000, and we will very quickly move towards $50K during the next 2, 3, maybe 4 weeks. Tim, I want to hear your take on that. Where's the cryptocurrency market going next, and do you agree with my price target in the short term?
Yes, I mean, because that's what we talked about yesterday, that, you know, it's playing out almost exactly the way we said it would. The thing I would say is, you know, that I like that you say there's a range there, Jeb, between 42 and 43.
Mm-hmm.
My estimate was 42.5. I'm actually kind of in the boat of wondering if there's a lot of momentum that won't let us get that far. And what I mean by that is, first of all, if you're looking at the 4-hourly chart, there is bullish divergence, RSI divergence, beginning to play out. We haven't officially set a bottom yet, I don't think. I think we still go a little farther down. Either way, if you're comparing the bottoms of back on 4-hourly chart, okay, bottom of August 8th, and now where we are right now, we haven't officially set that bottom. But unless we set that bottom below the 42.5, which I don't think you, me, or anybody else here think that's going to happen, that's going to be big bullish RSI divergence.
Yeah, no, that's a big deal.
Also, we missed it because this happened, today is the 12th. Back on the 7th, we missed it, and this is my bad. Maybe you discussed this, Jeb. The hash ribbons flashed by.
The hash ribbons flashed by. That's something that we meant to talk about, but we got talking about Ethereum. Yeah, let me show them that on the chart while you're talking. Keep going.
Yeah, so the combination of those two things, I believe potentially, I think we will drop down to 43 something. That's where it's really hard. Will we drop down to the 42? Like I said, that was my prediction yesterday, that I think we were going to go down to 42.5. And the reason for that is because that was a strong level of resistance during this accumulation phase that we have now turned into support. And a lot of times that's what whales do, is they find this sign of strength, which we hit our heads around the 46,000, close into 47,000. We hit our heads there, sign of strength. They sell a little bit, come back down to a level of support. They buy up a lot, and then we resume a massive rally. But with those technical indicators and the combination of the stories you're going to talk about here in a little bit with more adoption, it might be one of those things that's like, hey, we ain't going to have enough momentum to get down to those levels of support. It might be just ready to go ahead and let off now, but I do think we have a little bit left. The MACD even kind of shows we have probably a little bit left to go down before we resume. But with those massively bullish indicators, people who say like, oh, we're going to correct back down into the 30s, I'm like,
I don't see that at all.
I don't think that's going to happen at all.
I don't think that makes logical sense at all.